Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and our toll-free number, 800-951-0592. The website at allamericangold.com. And, man, Mondays are turning into days. Well, you know what? Probably since you started going to school. I would venture to say that's when Mondays really started sucking. And they never stop sucking, probably until you retire. And this Monday is no different. The carnage that is Wall Street and has been Wall Street continues. One of the largest sell programs in the history of Wall Street is going on right now. The Dow is down just under 900 points. It was down 880 points on Friday. It was down 650 points on Thursday. So far today, over 880 points today. The NASDAQ, the biggest loser. Matter of fact, the NASDAQ down 4.5% today alone, down over 500 points, below 11,000. So NASDAQ, 10,832, deep into bear market territory for them. The S&P in bear market territory, down 147 today, 37.53. And I think Wall Street is getting ready to go into bear market territory, and that is just the beginning. Everything being hit. Matter of fact, the only thing up today that I could find, the VIX, that's the volatility. Believe me, we don't want the VIX up. The VIX and bond yields. Matter of fact, the bond market in complete disarray. This is not things that you really want to see in the bond market. Yields exploding to the upside. The 10-year note at 3.32. And I want to say on Thursday, Jason, the 10-year note was actually below 3. This is a huge move in yields. You don't see this very often. The 7-year note, the 5-year note are fully inverted. They're in the 3-4 range. Briefly, early this morning, the 2-year note was also inverted, right? And that's your bond market recession coming warning. This is the second time since April that we've seen it. Jason, it's just shaping up to be a very ugly day.
Well, it could be ugly rest of the month. Could be ugly rest of the year, Joe, because these are the events that start to trigger a more large-scale downward turn in all things. So, I mean, I'll tell you, Friday seemed like a big trigger point, Joe, for things to really start going south fast. And, of course, you got rate hikes going this Wednesday, and the inflation number went up on Friday, which I think a lot. I think the people that don't understand it, Joe, I think they really thought that we had crested the highs of inflation. We were going to slowly just come back to this magic happy land where it was just a bad thing that's going away now. And I think that inflation number goes huge next month. And I don't know, where are we going to end up by July, right?
Yeah, and this is the problem. So to Jason's point, really, I'll call it the paper crowd. They're the eternal optimists. It doesn't matter, right? Here comes the hurricane. Right, they just saw their neighbor's house on the right and the neighbor's house on the left. They just saw their houses blow away, but somehow their house is going to be okay. That's always been Wall Street, and this is why we always say, hey, it's always gradual at first, and then suddenly, right? Suddenly it happens, and this is kind of the suddenly for Wall Street. You think about in 3 trading days now, Wall Street has lost almost 25. Well, the Dow's lost almost 2,500 points, and things are even worse percentage-wise for the S&P, the NASDAQ. You know, gold was up huge on Friday because we actually had data. Not only did we have inflation data with the consumer, the most negative they've been since doing the survey. Today, we've got the 5th largest sell program that we've seen so far. And why do I have the feeling it may be the largest sell program before the day is over? Everything's caught up in it. Gold and crude oil doing about the best as both of them are down a little over 2%, where everything else is down, like I said, up to the NASDAQ, down 4.5%. Cryptocurrencies absolutely being destroyed here. Get this, Bitcoin down almost 5,000 points, or $5,000, 4,847 right now, down almost 18%. Ethereum, those are the two big players. They're having a worse day. They're down 20%. Ethereum all the way back below 1,200. Bitcoin at 22.7. So, Jason, this is one of those, all of a sudden, the best case scenarios are out the window. The next best case, we'll call it the middle case, looking really, really bad. And, we got three little bears coming here, and it looks like this thing's going to be really cold, Jason.
Yeah, this is, and gold is down today, but you know what? One of the things, if you're looking at this stuff all the time, if you're one of those guys that likes to see these numbers, and I'm doing the numbers here for the last 3 days, gold has done actually very well. If everything's going to sell off, you want to be in the thing that's not selling off or hardly selling off over the couple of days. So you're talking 3 days. You're talking the Dow down 600 something, 800 something. Now it's down almost 900. It's kind of bouncing between 7 and 900. Very, very bad. Very bad. I mean, gold is like, it was 1850 on Thursday, the beginning of Thursday, Joe. So really, it's only down about $20. 3 days, but everything else is selling off like a wildfire, Joe.
800-951-0592, Patriot Radio News Hour. Joe and Jason, we'll be right back. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Monday. Coinbase down. It's been down as much as 20%. I only bring that up. That's the crypto exchange. Just remember, if your wallet is there and they go under, you lose whatever's in that wallet. Also, Celsius, another one of these. They're a place where you could allow them, let them borrow your crypto coins to loan out. And then they were guaranteeing 18%. I always hate that stuff. That's how you know you're in trouble. They have barred all selling and transferring. In other words, you're just going to take a beating there. You can't get your money out there. That has another big part of it, Jason. And there's rumors circulating that there may be others. So a lot of the I'll say this. I think a lot of people knew in the crypto space there was a lot of, let's call it creep factor in a lot of these crypto coins and crypto exchanges. And I think there's going to be a lot more carnage here. My guess is I woun't be shocked to see Bitcoin go back below 20,000.
Yeah, Joe, if one of those exchanges goes down and people lose all of their money, isn't that what the government wants? So they can come in and regulate it and say, hey, we'll give you a better one. I don't know when that'll happen, but Joe, I'm pretty sure that that sounds a very logical path for the digital currency to come.
The textbook, right? Oh, we need to protect you. Yes, that'll be that under the guise of protecting you. Will be the reason. And Jason and I, before the break, we're talking about inflation. Right, and hey, the porridge was just right. Goldilocks left the building on Friday with much higher, because here's the problem. I think they know the next inflation number is even going to be hotter yet still, and so we think about when would the Fed be able to stop raising rates. I think. Listen, I know a lot of people out there saying it's going to be 75 points. Some banks now are saying a full point come Wednesday. I don't see it. These guys are, I would embrace it. That would actually mean that they're, at least giving a much better, this is think of it this way. Go back to boxing in the Don King era, right? This match is rigged. It would actually be in their best interest to raise rates a full point on Wednesday, Jason, because then it would look a little less rigged. But I don't think they're going to do it.
Well, I was assuming it'd be a half point, Joe, because and especially now the way Thursday, Friday, and Monday has turned out for the markets, I don't think they have the guts to even attempt 3/4 of a point.
Yeah, right. I mean, if they raised a full point, what would be? We maybe forget about Dow down 900. We could have right down 9,000. I don't know.
Well, Joe,
they'd probably shut off the machines.
Check this out. Gold's down right now about $47, and if you're a gold guy that listens to the show, it's like, man, I hate it when gold goes down. But I went back to what you were talking about at the beginning. Well, Thursdays when things really started selling off really a lot heavier for the Dow and the Nasdaq. So I ran the numbers. The Dow from beginning of Thursday to this point is down 7%. The Nasdaq from the beginning of Thursday to now is down 10%. Gold is down 1%. So, gold's kind of holding its own. It sucks that it's down, but man, is it really holding its own, Joe?
Yeah, we'll see. The day's not over.
Not over.
Gold could end up being even. We don't know. But I think here's the problem. They were hoping that they're going to raise in June, and now July is definitely and it's going to be end of July. Late July, right at the end of July, last few days of July, maybe the first day of August, whatever that Wednesday is. Now they know, that's another 50 basis points. They were hoping that one was only going to be 25 and that they would pause in September.
Yeah, I think
the pause in September is now off the table, it looks like.
I think the rates just keep going, Joe, until they really, really have to reverse.
Yeah, until they break it. I think we're going to get 50 basis points every meeting until we're in the next depression.
That sounds logical, Joe. I mean, I feel sorry for myself just as much as everybody else. Where do you put that money, Joe? Here's the thing, and I don't feel sorry for myself. I know where I put it, but I mean, where do you put money? Everything seems to be going down. Oh, you can't put it in cryptos. No, can't put it in the Dow. Well, do you want to go buy property? Oh, I don't know if that's a good idea. Things look like they're going down fast there. I mean, so everybody's, hey, cash. Well, I'll hold it in the bank, or I'll hold it in, well, you got the 20% inflation, really. It's actually 20%. So you're losing 20% there, which is even more than the markets. It's one of those things. I mean, this is, very similar to what happened in the housing crash, Joe. Everything started going down. Even gold had that downward tumble there when everything was going down, and then it stopped and bounced back up. This is why I like people to put it in gold, because it's savings, and it will eventually be equal to the price of everything else, and especially now with the inflation, Joe.
Yeah, I mean, so many things to go and talk about. By the way, Procter & Gamble warning there's a tampon shortage now. I throw that on the list. Farmer sentiment absolutely collapsing. We talked Friday about consumer sentiment. Farmers talking about how they feel, and it's at the lowest levels in decades here, saying that now they're talking about over half of the farmers saying that input costs are starting to really dominate. 6 out of 10 farmers predict farm input prices. This is, what it costs them to farm are up by here's the low end. Ready? 30%. That's the minimum. Farmers saying as high as 60% more. 4 in 10 farmers estimate that input prices are going to rise at least another 10% next year on top of that, citing diesel and fertilizer cost. They're saying that the 21% of respondents, I guess, cited climate change. But other than that, everybody's just saying the cost to plant crops has gone absolutely parabolic on the farm side. And then listen to some of the weird things. In Iowa, as an example, Iowa Premium, they have a beef processing plant in Tama, Iowa. They've actually stopped their expansion. They were expanding the plant. They were going to add another 400 jobs. And Jason, they just announced over the weekend it's off, citing construction cost, concrete, which Jason, you talked about concrete last week. one of the huge factors, they said that they are no longer going to increase the plant, and they are going to wait until construction cost goes down. At the same time, China-owned, I want to say that because I don't think most people know this, Smithfield Foods says that they're shuttering their meat packing plant in California, saying that it's just simply too expensive to do business in that state. By the way, this plant, not a little one, 1,800 people going to be losing their jobs in California. China-owned Smithfield Foods says, you know what, we're just leaving the state altogether.
Yeah, well, Joe, that's what businesses do when things get more expensive, and they're, let's just say if you're a bigger company, your stock is dropping, and what do? You have to cut costs. There's only two things: you got to bring in more revenue, or you can cut costs. It's all about these economic guys. They try to tell you how confusing and hard to figure out it is, but really it comes down to pluses and minuses. If all the minuses are adding up and your pluses are cratering, you got to cut costs. You just got, and employment is the major one, Joe.
Yeah, and there Smithfield saying just utility cost 3.5 times higher to do business in California. Then, of course, they said not to mention labor cost. They've been targeted by animal rights groups. I feel bad for those 1,800 people as the Smithfield leaving. They're saying that the cost of their products are going to rise in California because of it. And I wonder, and I'm worried, is it going to rise everywhere? Because it doesn't say in the article that they're moving production somewhere else. They're just saying, hey, we're closing this place.
It's funny, Joe. You were an early you were early on the ball, using the term demand destruction, but it seems like it's percolating all over the place. People are using that term all over the news now because that's, I guess, what will eventually put us back to, I guess, a reasonable situation is demand destruction. You just blow it all up, and then maybe there'll be some sort of a normal market after that. But yeah, it's funny, Joe, because I know you weren't the only one out there using that term, but you were early. You've been using that since last year, and man, we're sure looking at it, aren't we?
Yeah, this is the only way for this to end. And again, like I said, just think about what we said in the first segment. Listen, the Fed is going to raise rates until they break it, because the bottom line is inflation's not going away. And then once they've broken it, and of course, a lot of your paper assets are going to be feeling the effects of that. They're already feeling the effects of that. Everyone's 401ks are just getting obliterated out there right now. But here's the problem. The only way to end it is to cause demand destruction on a scale most people aren't expecting, because that's the problem with how much money that they've actually created. The only way to fix it, they got to destroy the money. That's what they have to do. They've got to destroy it. And how do you destroy it? Well, you've got to lose it. It's really not that complicated. Listen, how incredibly hot was it this weekend? And all over the West, even like into Texas, record-breaking heat. Texas. Now, Texas is a huge state, over 26 million people. They said that the electrical grid set a record for demand as the heat wave really hit in Texas. They're saying that the grid was operating at almost 100, like mid-90s. That's dangerous to be that high. But here's the thing that I want most people to understand. Texas now admitting their main utility provider says that it is handling the record demand. But Texans are going to pay double the rate that they paid last year, Jason. So utility bills, I don't know in every state if they'll be doubled, but listen, the utility bills are going to be up 30% if you're lucky, 50% to 100% if you're not. In this heat, this record heat, just going to make the problem that much worse.
Yeah, mine's already up. It's not double, but once again, Joe, how surprising is it that the price of our electric bills, our natural gas bills, all this stuff going up? It's not a surprise. I mean, we're still barely in Colorado holding on to, if you do the 85 octane, the low end regular gasoline is $4.90. Almost every gas station is like holding this $4.90, Joe. So it's just a matter of a couple of days before it's in the fives.
Yeah, and again, you guys are the low end on fuel prices as far as that goes. We're at $5.60 a year pretty much throughout. There's a few places a little cheaper. If you go to Tucson, I think Tucson is closer to $5 because they get their gas, I think, from Texas. Well, we get it from California. So, yeah, whatever genius thought of that idea. But neither here nor there. Here's things, McDonald's today, and I love what they had to say. First, they got rid of pretty much all the healthy food off of the menu. Said, we really don't make any money on that stuff. Let's just get rid of it. They talked about inflation. I'll tell you what McDonald's is doing. By the way, everything's getting more expensive, but McDonald's has a plan. Wait till you hear it. 800-951-0592. Gold's down 47, 18.25. Silver's down 86 cents, 21.07. And the Dow's down 800. The S&P's down 130. The Nasdaq's down. I don't mean to laugh. There's nothing funny about it. Down 480. McDonald's, their CEO said, "Hey, we got a plan. Here's our new plan. Number one, we're going to get rid of all the healthy stuff." Right, because we don't make any money and we throw most of it out, and when people order it, it clogs up, it slows down the drive-through window. So they're getting rid of that. But they said everything is getting more expensive. But here's what we're going to do: we're going to raise prices more often, but just in smaller amounts. Instead of, waiting 90 days and raising everything a lot. Jason, their new plan is, hey, we'll just raise prices every 30 days, but just a little bit, because that'll be better.
Right, Joe. Well, that's kind of what we were talking about with the concrete last week, which is they'll tell you the price hikes ahead of time. Hey, August 1st, $200 a yard. We're just going to, this is the system adjusting to the rapidly rising costs. This is what you can consider a form of hyperinflation, when you're pricing in the prices going up as a part of the routine of, hey, every week, every month, every year, this is where it's going. So we got to just always be ready to have those price hikes in place so that our customers can't get mad at us. They were warned, right?
Right, we warned you. Hey, by the way, we're going to raise prices this month, and we're going to raise prices next month, and then we're going to raise the month after that, and the month after that, versus, hey, we're not going to wait till August and then jack everything up 50 cents a dollar. We're going to do it gradually. One of my guys, Stanley Druckenmiller, you got to pay attention when he gives information. He was at a conference in one of those meetings. It was a Thursday last week, and really great things. First, he talks about how shocked he is with inflation and how much higher than expected, putting the blame right where it belongs. Said he's absolutely shocked at the Federal Reserve's slow response to rising prices. Said the Fed, which carried on, just think about this, the Fed kept buying bonds until April of this year. Said going to be one of the biggest mistakes in the history. A lot of assets purchased during that period. I think a lot of people moving out of the risk curve will lose money on it. He said that the S&P 500 is in an absolute bubble. That bubble is bursting. It is highly, highly probable that the bear market has a long way to run. Went on to say that as the Fed, whether or not the Fed can produce a soft landing. So I thought this was a great one, because I'm arguing here. There's no chance. They cannot do it. Right? Here's what Druckenmiller had to say about it. Betting on a soft landing, to me, is a really long shot. Okay, so he's in my camp. Then he put something in there that I did not know. And I will tell you I didn't look, but if he said it, you can take it to the bank. Well, maybe that may not be a good expression anymore, right, Jason?
Right.
I wouldn't take anything to the bank right now. He says that once inflation passes 5%, so we know just Friday they said 8.6. By the way, something they hid, and shame on me for missing it because I could have found the number. The month-over-month increase, if you annualized May's increase, do you know what the inflation number would have been? It would have been 12.3 annualized. So it was actually a lot worse than just that 8.6, which is probably why we're seeing this reaction. But here's what he said once it passed 5. He said inflation has never come down without interest rates rising above the CPI, and it's always been, at best, a recession. So I have no idea, and I hope this isn't right, but could you imagine a Fed's funds rate of 10% or more?
Yeah, I was watching a guy this weekend, Joe. He said, this thing needs to be, you gotta crash it. He said, put it at 9%. The Fed funds rate should be at 9%, and that will stop the inflation. But no one's going to do it. He's like, this is going to be an apocalypse of market stress for a long, long time if they don't just, buck up and do it. And Joe, I don't even see a situation where they're ever going to do it. I think I just think they're going to print away, and there's going to be some sort of a reset. We're all heading for this reset. What is the reset going to be, right, Joe? That's the key.
Yeah, I think he absolutely talked about crypto, likened it to the NASDAQ. Obviously, the NASDAQ has had plenty of ups and downs. When it's good, it's real good, and when it's bad, it's real bad. Had a big warning out for retail traders. Right? That's you and I, the average folk out there. This is stuff you're doing outside of your 401ks and, the new mobile apps. Saying that he's worried about the many, and this is in quotes, bull market geniuses that were surfing with a hurricane, giving them some nice waves, though like anything, nothing lasts forever, and he expects them to be totally wiped out, Jason.
What do you say, Joe? Man, if you're not thoroughly depressed after the first 40 minutes of this show, I don't know what would do it, Joe. Because what good news is there, Joe? I guess the question.
But again, listen, these are all warnings.
Yeah,
you
these
can
are
do something
exactly
and protect your wealth.
Yes.
Most people don't do anything. This is the point. And I don't know why this is. Most people end up doing what? I'm going to sit there and do nothing. This is going to be. I'm going to tell you though. This is what makes it worse. As if I haven't depressed you enough. This is going to be the first time in 50 years where the ability to print more money comes to an end. Comes to an end. There's no debt bubble coming to save you this time around. I think everyone's going to get wiped out, and then I think we're going to have several very traumatic years. The creation of this digital currency, everybody that had any money still in the banks, you're going to join all your paper assets, get wiped out there, and we're probably in a 10 to 20 year cycle where the Dow doesn't do a whole hell of a lot after it corrects. Patriot Radio News Hour. We'll be back after the break. 800-951-0592, Patriot Radio News Hour. Yeah, man, I just haven't gotten all the way through, but I started just going through numbers here. This may be the worst stock market year ever. Oh, well, in recent memory anyway. I mean, right now the Nasdaq's down 30%.
Yep.
30%. If they lose, another, they're a little over 1,000 points away, about 1,400 points away from being down 40%. The S&P 500's down over 20%. And most people, man, over the weekend, Goldman Sachs is saying S&P is going to be at 3,100, which would make the S&P, if that's the case, that would be down 35%. Jason, these are astronomical type losses, but again, every time we've had these, go back, we say, well, we've had these, 87. People talk about the dot-com bubble, then 9/11, right, which kind of coincided with the dot-com bubble. Then we had the housing and financial crisis, right? Then we had the bond market trauma during Trump, right? And every time the Dow came back to only go higher.
Joe, it's kind of a sneaky crash. Aren't they really trying to keep it as quiet as they can as this thing just keeps on going down, and it's a slow grinding crash. And I think they're going to keep doing that.
Yeah, when you get these numbers, remember the financial crisis? It was horrific. And they're like, hey, listen, when you take the start of this is the worst start of the year going back to 1932 and all of these, like today, it's the 5th largest cell program in the history. There's a lot of factors working against all of this. The big problem, though, is, so listen to Stan Druckenmiller. And he says, hey, I don't know what these guys are seeing here, but if you want to do any little bit of research, the Fed's funds rate has to go so much higher than people think to stop inflation. And this is my point, and Jason and I have been talking about this double Great Depression. Because, number one, I think they quit. How high does it get? I don't know, right? I think the Fed's funds rate, I think at 3%, maybe 3.5%, they quit because we're in a full-blown recession / depression, but they won't be able to go back to quantitative easing. So before you get to quantitative easing, remember, rates got to go back to zero.
Right.
And then they can start quantitative easing. But you can't do it when inflation is still running, way above, when CPI is running way above what the Fed's funds rate is. Jason, it's impossible to do. Their only choice is, I guess they could say, hey, our new inflation target's 5%. I guess they could try that.
Well, I was going to say, Joe, what if in August or September we have 10.5% on the CPI? How could they? I think
that's what people are worried about.
I think that's happening, Joe.
How can you stop raising rates at that level, and you can't?
Before the number came out Friday, you were thinking it was going to hit the 9s, and I was thinking, well, I'll bet it's going to be kind of sideways but up. I was just thinking, because that would be kind of a nice soft way to say, hey guys, it's going to go up. But I don't think they wanted to shock people with a 9. Because you know me, Joe, I think the numbers are rigged so that they can make it a lot more easier to digest.
Well, that's what I thought they would go down.
Yeah.
Because then at least in the next month, maybe if it went 9 again, they're like, see, okay, well, maybe we're at the peak, but at 8.6, I think next month's number is higher than that.
But what if their actual fake number is 9.5 or 10? They just give you the lower number, Joe, so that people don't completely panic. I mean, look at the markets today. Look at them reacting to that number. So I think next month, Joe, we got like 9.2, 9.3. I think it goes up substantially. I think you see at least a 9 to a low middle 9. So
well, the think tank that tracks tries to keep the Social Security Administration honest just upped what the COLA adjustment. Remember, COLA for Social Security, July, August, September. That's the 3 months they take. They don't count any of the other months. They're talking a COLA adjustment that could be 9%. So that tells you that they say inflation in July, in August, and September is going to be worse than it is right now at that 8.6.
That number tends to be a little lower than the inflation recently, Joe. It seems like the inflation CPI number is a little higher than than what they're going to give people, right? So, hey, 9% for the adjustment. What is it going to be? 10% on the CPI? Maybe 11. Well, how about that one, Joe? How about 11 or 12%?
Yeah, and it's going to be
hyperinflation's hyperinflation. Here's the thing: nobody wants to. It's kind of like being shot. Nobody believes they're going to get shot until they're shot, right? And so hyperinflation, we know it can happen, but that's not a real thing until it actually happens, Joe. So what? 11%? Why not 12? It's very possible things are going in the wrong direction. We don't know, Joe. Joe and I would do the best we can, but nobody knows for sure. I think there's some guys at the top that sort of know, but nobody else knows.
So this just breaking here. By the way, over the weekend, the Japanese yen rose sunk to the lowest level since 1998. And now there's an article out on Zero Hedge warning about systemic collapse in Japan. And, of course, if they collapse, everybody collapses with them, saying that the Bank of Japan bought more than 1.5 trillion yen of government bonds to try to defend the yield curve. And it looks like, Jason, all of that spending to try to keep this in line is starting to fail. And if we have a massive fallout on the yen, the ramifications are just going to be horrible. We'll be back after the break. 800-951-0592, Patriot Radio News Hour, and the pullback today. We've got $10 liberties. They're going to be at $1,100 today, so saving $15 from Friday. And really, Friday, if prices were where they closed on Friday, it would have been even higher than that. So $10 liberties at $1,100 today at 800-951-0592. The Dow is down 700 plus. News breaking now that Japan, it's gotten so bad there. They're saying right now, to give like-to-like comparisons, Jason, the Bank of Japan would be, if the Fed was doing what Japan is doing, $300 billion a month of quantitative easing. That would be the comparison. So this is unprecedented. And again, Japan looks like it's on the precipice of something really ugly. And again, remember the European banks. Friday, we were back to the pigs again, and that trouble. It just feels like, Jason, systemic risk is getting worse and worse, right? That hurricane that J.P. Morgan was talking about, I don't know what the actual trigger point's going to be. But when guys like Stan Druckenmiller say, listen, the Fed funds rate's got to go above the CPI number for us to have a chance here, that's hard for me to take in, because now I'll be honest, if that's the case, we're probably talking about the lows of the financial crisis, Dow 6,700.
Yeah, Joe, it really has the feel of everybody's taking their chips off the table. The casino and the gaming and the fun is just, coming to an end, because I haven't, even if we like it or don't like it, Joe, there are times where the markets are doing good, or there's crypto's on its way up. There's always things, there's always something that's usually going, there's nothing going up. Everybody, you're talking Japan. Who's going to put money in Japan now? I'm not going to, would you, if I was a big corporate, big dude, CEO, who would put money in Japan right now? Who would put money anywhere right now, Joe? Everyone is taking their chips off the table.
And tell you, the 10-year note hitting the highs now here, 3.35 on a 10-year. That's going to put mortgage rates. We're going to have 6% here very, very quickly, and it's not going to stop there. I mean, I know my first home loan was 7.25%, but that was normal back then. People haven't seen interest rates, mortgage rates like this since the very early 2000s. And are we going to see a replay where mortgage rates are back where they were under Volcker? That sure seems like, I guess our two choices are either rapid inflation, right, or Volcker-style interest rates.
Yeah, Joe, I mentioned that a couple of weeks ago. It's like, what if it goes up to like 10%? I think we had a small business advertiser on last week. It was a mortgage guy, and it's like, you never know. You might want to get a home now because you can always refinance if they go back to zero. But what if it goes up to 10 or 12% for a mortgage or more and stays there? We just don't know what damage they decide. What they're going to pick up poison, right, Joe? And we don't know for sure what they're going to do, right?
Yeah, and the Fed owns all those mortgages, so they need to sell those, which drives rates higher. That's what happens, is they were buying them to artificially lower the rates. Oh, what a mess.